If you're into real estate, you need to watch this video. The difference between interest rate and cap rate, what you need to pay on a property versus what you're borrowing.
And how they work together.
Your Uncle Paul will show you right now how they interact and what you need to do to make money on a great real estate property on the Everything Money channel. Let's go, baby. Paul, I'm confused already. Interest rate versus cap rate when it comes to real estate.
You wake up confused.
Pretty much. Interest rate. I get interest rate.
So this comes from a conversation with somebody.
Go on.
Who was recently messaging me. They found me on LinkedIn after finding our YouTube channel. They said something to me about the cap rate on a real estate deal, and then I said something about the interest rate. They're like, wait, those don't have anything to do with the other stuff. I'm like, yes, they do. And 15 years ago, a broker once said to me, cap rates and interest rates have nothing to do with each other. They do. And here is why.
Go on.
It has to do with one of our videos. There's a video out there, guys, about paying down your mortgage is a terrible idea. We just did the video. Please watch it. You're going to make $2.4 million from just watching it, I guarantee you. But here's why it matters. We've learned that Robert Kiyosaki preached to everybody, the rich dad, poor dad guy, that you shouldn't borrow money on a depreciating asset. And what really matters when you borrow money is, can you earn a return higher than the interest rate you're being charged?
What's a depreciating asset?
Like a car.
Okay.
A car, something that loses value.
Right,
a computer.
Okay.
Don't fight. Whatever. I mean, things like that. Mm-hmm. Now, here's the key. Like I said, you want to borrow the money if you can earn more return than the interest you're being charged. So, for example, if you're being charged 3% interest and you can make 10%, you borrow.
Yes.
Right?
Yes.
Okay. So, what does it do with cap rates and interest rates? Well, Seth, what is a cap rate?
Yikes. If I pay cash on a property,
yep,
it's the return I get. It's the return I get.
Correct. So, if you have a $100,000 property and the cap rate is 7%,
yeah,
what's the profit you're going to make per year?
$7,000.
Excellent.
This is why I'm on the show, folks.
This is exactly why you're on the show.
Go on.
Cap rate is the return you get if you paid cash for the property. Very simple.
Okay, I'm starting to get this now.
Okay.
So if I don't pay cash for the property and I take out a mortgage,
and that mortgage is 3%, is that a good thing?
Yes, because I'll put $20,000 down.
Assume you don't put anything down.
Okay.
Say you finance the whole thing. You're paying 3%. That's $3,000. Right? At 3%, you're paying $3,000. You're still making $4,000. Correct?
These are like
right. So let's go back. Now let's say this. Let's say the interest rate was 10%.
Uh-oh.
Does it work?
No. Wait. No, because well, now I'm confused. I just got it. Why is our cap rate locked in at this rate?
Exactly.
Uh-oh.
So, exactly the question. As your cap rate goes up, as your interest rate goes up, your cap rate needs to go up with it. That's how they work together. Because in this situation here, you had a 3% interest rate, 7% worked.
Yes.
If you have 10% interest, does the 7% work anymore?
No, you're losing $3,000.
Correct. You're borrowing at a higher rate than your return on your investment.
Okay.
So if the interest rate goes to 10%, you need 11, 14, whatever the percentage rate is, because on a $100,000 property, if you're borrowing at 10%, that's $10,000 a year in interest.
Yes.
So if you need to make $14,000, what's $14,000 divided by $100,000?
I have no clue.
14%. So that needs to be your cap rate. It needs to be something higher than your interest rate.
So how do we adjust our cap rate? How do we make that number
So
higher?
that's why cap rates have been so low lately, because where have interest rates gone lately?
Low.
As interest rates go lower, cap rates go lower. As interest rates go higher, it's your cost to borrow goes higher. What is your cap rate going to do?
It needs to go higher or you shouldn't be doing it.
Because you can't cover the mortgage, the interest cost. That's the very basic thing.
So how do we get this cap rate number up? And what?
Okay, so how do we get the cap rate up?
This is remodeling the house or just simply charging more?
You just pay less. Remember, cap rate.
Uh-oh. Oh, pay less.
Equals net income divided by sale price, purchase price. Can you control the net income? You can a little bit, but when you buy a property day one, it's what the previous owner had, right?
Okay.
But what can you control?
What you pay for it.
Right. So that's why in this low interest rate environment, I worry a little bit about real estate prices. Because when rates start to go back up again, what happens? We have to have the sale price needs to go down for the cap rate to go up, right? Inversely.
Oh boy, yes.
I know, it's tough. So let's say your property makes $10,000 a year.
Okay.
And you pay $100,000. What's your cap rate?
10%. Yep.
So if you want this to go higher, if you want a higher cap rate, you got to pay less. Let's say you paid $50,000. What's your cap rate now?
20%?
20%.
Am I right about that?
Yes, you are correct.
Okay.
Now let's say over here, the property still makes $10,000. It still makes $10,000 because that's just what it does. Let's say you pay $200,000 for the property. What's your cap rate?
5%.
5%. So all you did was you kept the same net income all the way around, 10,000, 10,000, 10,000. We just changed how much you pay for the property, and it changed the cap rate. So as interest rates go up, you have to pay less for the property to cover that interest expense.
If you want to watch Paul, Andrew, Paul's right-hand man, and myself analyze some of these deals, we have literally tens of zillions of them on YouTube right now.
Maybe billions.
Where we talk about cap rate, and it's still...
It's a very difficult, it is the hardest concept we have to explain to people.
Yes.
But basically all it is if you paid cash for the property, what would your cash return be? Because you're going to pay the mortgage with your cash, right? So as the cap rate goes up, as the interest rate goes up, you have to have a higher return to be able to pay that interest.
And you have to pay less for the house to get that higher return.
Correct. Because your net income is going to stay the same on day one. The more you pay for it, the lower the cap rate. The less you pay for it, the higher the cap rate. And it just makes sense. Are you going to make more money or less money when you pay less for a property?
Yeah, that's true.
You're going to make way more money as a return on your investment.
Now, in the housing market, people love paying more.
Investments are the weirdest thing in the world. It's the only thing in the world I see people love paying more for. Because they feel like, oh, the price is going up, so I'm going to get on that train.
Yes.
And when the price goes down, they're like, I want out, because I see the price going down. Mm-hmm. It should be exactly the opposite. But we brag about paying less for a car, we brag about paying less for clothes, we brag about paying less for everything except for our investments.
Pay more to Paul by liking this video right now, pretty please. We hear these terms, the YouTube algorithm. We haven't quite figured out what it is, but it's popping for us now, and we'd love your support. If you love what Uncle Paul's giving you, smash that like button, pretty please, with sugar on top.
Yeah. This is something that I expect a lot of comments, and please comment below. I do answer. I will respond. I write PG at the end when I respond. This is a concept that needs to be understood just in general in investment. The more interest you're being charged, the higher return you need to pay that interest charge. That just makes perfect sense, right?
Yes.
The more interest you're being charged, you need to make more money to pay that interest. And in order to make more money, you need to pay less for the property.
So when we do real estate deals, and you guys assume a general cap rate that you want, and that
based on current interest environment. Yes.
So now it's starting to come to me why, like, the idea of, like, you guys assume early on what cap rate you want to pay, and that determines what price you want to pay on the
Correct.
property.
We just take the income and divide by the cap rate. So if we see a property that makes $100,000 a year, and we want to pay a 5% cap rate, we have to pay $2 million for the property. Right?
Yes.
If we want to pay a 7% cap rate,
you have to pay less.
You have to pay exactly, whatever that number is, 1.4, 1.5 million or something like that. I don't know.
I get it now.
I have to pay less for it to get a higher return. The more I pay for it, the less the return. The less I pay for it, the higher return. Income is still the same.
I get it now. It's taken 2 years.
Yep. And if interest rates go up 2%, that's why my cap rate will probably go up 2%. Interest rates and cap rates will go along together. So that idiot broker, who, by the way, is one of the biggest brokers in Cleveland, who didn't get this concept and told me cap rates and interest had nothing to do with each other, and I immediately said to him, oh, so if I can borrow at 12%, I should still buy the 6 cap.
It's not our dear friend Hesh Sagafi.
No, he's a mortgage broker.
Got it.
Not a real estate broker.
Okay, great.
Hesh and I are homeboys.
Wow, Paul, this is incredible.
These are the things that I want to teach people because the learning curve is going to be very steep. If you understand these basics of investing, it's going to make your life easier of saying, well, wait a second, why should I pay more for this when my interest charge is X? I mean, these are the things you have to start thinking about. It's not going to click day one, but as you do more and more and look at more deals, that's what you need to be doing to be able to understand these more.
And as we've learned from our past videos, is you certainly can't trust the real estate broker to give you...
As I said to the same person who reached out to me about this one, I said, do me a favor, go find 100 properties for sale right now and ask the real estate broker or agent, is this a good deal or not? Tell me how many of them say, no, this is a shitty deal.
Yep.
Guess how many are going to say, no, this is a shitty deal? 0.
They're all great
And if you
deals.
bought all 100 of them at the asking price, how would you do? Do you think you'd do very well?
Not today.
But yet, why would the brokers and real estate agent lie to you? Because they're trying to sell something.
Yes.
That's fine. My job is to make you smarter so that when you walk into it, you don't waste your time with that. You know, I've been posting lately about buying a $100,000 sports car for anybody who brings me a deal. And I have my parameters. But the one thing I'm very proud of is I asked for 6 parameters. When you give me those 6 parameters, I will tell you that quickly whether I'm interested or not. Because I'm not trying to waste anybody's time. Because of my years of experience, I can look at those 6 parameters and say, is this within the ballpark? And guess what the hardest thing for everybody to give me is?
What's that?
The ask price. It's number 2 on the list. What is the ask price? Maybe it's number 1. And they're like, well, I'm not here to discuss. If you don't give me an ask price, I'm not willing to discuss the deal any further. We're done. Because that is what determines everything, is that ask price. That's what determines my entire return. So if you don't give me an ask price, asking me to go out I'm bid against myself, not going to happen. And I'm trying to get people who watch these videos and understand this to understand that they can become good like me. It's just from experience. When Andrew first started with me, he was confused by this.
Yes.
And within doing 20 examples, he got it. 30 examples, he got it. It's just repetition. I'm not some savant. I don't have a PhD in chemistry.
Those idiots. Like, follow, subscribe. Always on YouTube. Seth and Paul for Everything Money channel.
It takes 2 seconds to like our video.
Thank you.
And it makes me feel like I'm such a good person.
Even though you may not be.
Even though I'm not.
Thanks for following along, everyone. Everything muddle. Money. Everything muddle. Don't make me mince and muddle words. Everything money. Thanks, guys, on YouTube. Love you.